Let's dive in. So in this video, we're going to be going over how to form a bearish trade using a bullish trend exhaustion. So in this video, we're going to be going over how to find a trend exhaustion using the concepts of order flow, fair value gaps, and liquidity. So let's get into it. So the first thing you want to understand right off the bat is when you have an Asian session like this, right, you can see price heads higher above the Asian range. Now, when we're above the Asian range, we just want to mark out or draw a line like this, right? This represents the Asian low. And so the Asian low is a liquidity area that's left intact. We also leave some trendline liquidity in London. So if we just continue to look at the price action, we see structure high, structure low, high, low, high. Now, we're not necessarily looking for a break of structure, right? We're not necessarily doing that. What we can see is price taps into a key level, right? A key level I had from Wednesday, Thursday through to Friday. This is Friday ES on the 5-minute charts in the New York session. So I'm looking at a couple of things. So the first thing I want to understand is when we see a sharp move down like this, we want to understand what was going on in this region because we rejected a key level. So that's the first thing to understand. So if we just go over now to the ATAS platform, right, we're looking at the same price action you saw over here, right? So this is ES on the 15-minute time frame. Let's go to the 5-minute time frame. So on the 5-minute time frame now, we have the same candles you see as what you see over here, right? So what you see is a direct correlation between this long wick, right, and these candles, right? So we're just going to kind of dive into this and understand what makes a trend end, right? What makes a trend exhaustion, right? As so many people are asking me. So what makes a trend exhaustion is this, right? We want to see price come into a 15-minute fair value gap, which is a key level, bearish fair value gap. We want to be above the daily opening price, and I'm going to go over what that is. I'm just going to write DOP for short, and then we want to understand order flow. So this video is going to be about understanding order flow and what happens in the candles, right? But if we just kind of take things back a little bit, what we have here is a daily PO3, right? A daily candle. So what we can see over here is we've seen price tap in to this fair value gap, and we can see the daily openings all the way down here. So we are significantly above the daily opening price, right? We're way above the daily opening price. And so to give you some context, right, this is obviously a selling trade, but if we just continue to play price on, I want traders to understand that we are looking to catch this wick expansion on the way down. So for those who say accumulation, manipulation, and distribution, this is what it actually means, right? So we are simply looking to understand the end of this trend using order flow and the power of 3, right? So the way we use the order flow and the power of 3 is we want to position ourselves inside of this higher wick to catch the overall expansion to the downside. So that is why we use 15-minute fair value gaps, daily opening price, and order flow. And so if we go now to the ATAS platform, let's get it up next to us, right? So we can see this rejection, and we're going to understand what was going on. So let's take a look at this wick. This wick here is very, very important. So we're going to kind of understand this side by side, right? This first wick. So we can see 0 for 43, and then we see 41 for 264, right? I'm just going to focus on those two kind of rows. And the reason I'm doing that is because I want traders to first understand 41 for 264. So what does this mean? So we've come into a bearish fair value gap, and we're seeing 264 aggressive buyers, right? They're hitting the ask. So the left number is the bid, the right number is the ask, right? So the bid represents the total number of aggressive sellers. The ask represents the total number of aggressive buyers. So here we see around 41 for 264. So that's roughly going to be a 6.5 times difference between the total number of aggressive buyers than sellers, right? Or 5 times, whatever the math is there. So when you see so many aggressive buyers in this way, I want to stop and I just want to stop and ask you a question, right? What is going on inside of this candle? What's going on inside of the wick that makes it, that gives us a rejection? So when we see aggressive buyers, right? This here is aggressive buyers, right? We see 41 for 264. This means that there's significantly more aggressive buyers than there are aggressive sellers, right? Roughly 220 more aggressive buyers and sellers. So we see that by the blue delta outlier. Notice how this delta outlier is a lot more than all the other ones down here. We also had 300 versus 729 somewhere down here as well, the same candle. So we can see when we enter the zone, we see a significant buying of volume. We see a significant number of aggressive buyers entering the zone, right? Aggressive buyers. Now, with that being said, we can see the market's heading lower. So you want to ask yourself, what was going on inside of this region, right? Was the trend going to end in this region? So why didn't I pick this area? So there's a few reasons for that, right? What was wrong with trading here? So here, there's no clear fair value gap. That's the first thing. There's no fair value gap. We haven't tapped into a fair value gap. And just to give people some context on which fair value gap I'm speaking about, if you go to ES on the 15-minute time frame, and you go all the way back, we actually had this key level. So this key level held from Tuesday, right? This was Tuesday, the 17th of June. And so the reason I like this fair value gap from an ICT perspective is that we took out the Asian low. So we had one phase manipulation and then we had our two phase manipulation. Then we left a fair value gap, right? So this was a key level from Tuesday. FOMC held the level. This was the wiki FOMC that gave us good sells. I made a trade on that earlier on in the week. And now we come on to Friday, and on Friday we have the same kind of thing, right? We're rejecting off this area. So we know we're at an area of strong supply. And so to answer the people's questions of how do I find a trend exhaustion, you want to be identifying areas of supply and demand. And so to find areas of supply and demand, to find proper areas of supply and demand, you need to understand what is going on inside of this region, right? Why did the markets reject lower? And the reason the markets rejected lower is because of the data we see over here, right? 41 for 264. Now, if we go to the final two candles before the rejection, you want to see what price was doing, right? We see a zero at the top, right? Just like we saw over here, we saw a zero at the top. So what does that zero actually mean? So that zero represents a finished auction. So when you're looking for a trend exhaustion, you want to look for a finished auction. And so a finished auction, very simply put, is when you see a zero on one side of the candles. And so when you see a zero, you want to ask yourself, first you want to think from a literal perspective, what is the footprint charts telling me? Well, the footprint charts are telling you that we see 0 for 37, which means that there's 37 aggressive buyers, and there's 0 aggressive sellers. So what that means is there's 37 market participants hitting the ask. And so when the market participants hit the ask and you don't see any reward from those buyers, that means that those buyers are being absorbed. And this is what creates a trend exhaustion. I want traders to understand that. So we also see that over here. So we see 280 for 728. That's roughly a 3x difference. We see 408 for 753. That's just under a 2x difference. So we're seeing a significant amount of buying volume before a huge seller enters the market over here. So what happened to the buyers here, and also here? What was going on with those buyers? Those buyers essentially failed to drive the price higher. And so when you look at it from a fair value gap perspective, right, the only reason fair value gaps hold is because there's been an absorption. So what's going on here is that there is a buyer absorption, right? There is a buyer absorption, which means passive sellers are in control. And so this is the main kind of theme of the video. So what makes an A+ setup and what makes a trend exhaustion, as people are asking, is you want to see an absorption. In this case, it is a buyer absorption. We are way above the daily opening price. We're looking to catch this wick. And we've also entered a fair value gap, which is just over here. So these are the concepts we are looking for, which constitutes to the end of a trend. So I'm just going to clear the charts up and we're going to go through a couple of things over here. So now on the 5-minute time frame, how could you have entered this particular trade, right? So I personally took this trade. So I also have a 15-minute FVG over here, right? So this was my 15-minute fair value gap. And so when price comes into this fair value gap, I'm just going to get rid of the power of 3. So when price comes into this fair value gap, there's only a couple of things that can happen. We can either hold the level. So if we just go down to the 1 minute, right? What happened here on the 1 minute is the following. So from a common sense perspective, right, every trader knows there's only two participants that move the market, right? Buyers and sellers. So what makes the continuation of a trend and the exhaustion of the previous trend is by reading the buyers and sellers at key levels. So likewise, what we saw is we want to understand what's going on over here, what is going on over here, and also eventually when we see price entering, we want to understand what was going on kind of in this region, right? So we saw a rejection candle over here. This is what we're interested in. So this is where we're going to use the footprint charts. And so if I just bring up the footprint charts again, I like to have the footprint charts next to each other so the traders can understand exactly what's going on. So if we just get that up, so if we just get that up, right, footprint charts and order flow, what we're seeing is we're seeing this, right? This is what we're going to be studying. So we're studying 1, 2, and then 3. So we want to understand what is going on at number 1. So at number 1, this is what was happening. So at number 1 over here, and let's get this up next to each other. So at number 1, what we're seeing is this is kind of the first circle over here. right? Now we're going to have the order flow for charts. So we see aggressive sellers coming into this region, right? We see 57 for 0, 150 for 3, and then eventually the markets do find an area of support or demand, let's say. We see the key level, right? We see this key level holding, and then the markets obviously come up to this region, then they fail. So what does that tell you about these aggressive sellers over here and these aggressive sellers, right? So what it's showing us is that these aggressive sellers are winning, right? They're winning, right? They're being rewarded, which tells you that sellers are in control. This tells you that this bearish trend that started over here, this bearish trend is willing to continue, right? It's willing to continue. And the reason we know that is, again, just from the order flow. So if we just take a look, we go back one step over here. Where are we now? So if we go back now, what we can see is we're also looking at this rejection area. So what we're seeing is we're seeing this second box, this rejection area. We saw 217 for 343. We see 3 for 85. So we're seeing positive delta, positive delta, positive delta. We see a 0 at the top. So we're seeing aggressive buyers that have failed to drive price higher. Instead, what's going on is that we see the zone breaking. So this shows us that the trend is willing to continue because aggressive buyers in this case have failed. That means sellers are in control. That means the downtrend is going to continue, right? Simply put, we're just using the numbers inside of the candles to validate our ideas. Now, the final thing, and this is the most interesting, is the final rejection, right? This rejection candle is probably the most interesting and my favorite part of the video, right? So what we're seeing is we see this rejection candle over here, the third kind of circle here, is the same as this candle, right? Even though it's a massive red candle, you want to understand what was going on at the top of the candle. So when you're looking for a trend continuation, it's the opposite of a trend reversal, if that makes sense. So if you want to see a bearish trend continue, you essentially want to see sellers in control, which means buyers must fail. It's that simple. So if we look over here at the couple of rejections, we saw 96 for 269, big difference there, positive delta. And we also saw at the top 79 for 211, and we had our trusted finished auction. So we see the buyers and the sellers have been wiped out. So what does a finished auction mean? One more time. When you see a 0 on one side, right? In this case, we see a 0 on the bid, which means that there's no aggressive sellers. There's only aggressive buyers, which means that the auction itself has been wiped out. There are more aggressive buyers than aggressive sellers, right? But those aggressive buyers failed. Because if these aggressive buyers, and it is a significant number of aggressive buyers, if these aggressive buyers succeeded, they would have broken above the level. But we saw a break below the level, right? And this is the reason I took the trade the way I did on Friday, right? So for those who are interested in understanding this, what I did for my entry is that I want to be entering here. You can enter up here if you want, although I didn't catch the trade. I caught the trade down here, a little bit of a late entry. And when you want to have your stop loss essentially just above that wick over there, right? And the next place is where you're going to target, right? So realistically, we had obviously the Asian low was our final target. Right, Asian low was the final target. However, we had some liquidity in London to sweep, and it was a rangy session towards the end. So if we just continue to play price on, what we saw the market did move down in our favor, right? So we can see this. And so what's super interesting is that we can see this as well. We can see the market coming into our level, rejecting our level, and then heading lower. So what does that tell you about this particular area of supply, right? So whether you took a trade here or whether you took a trade here or even down here, right? We can see the market paid us along the way. So you want to understand what was going on inside of this level. This was a strong level of supply, right? This was a strong level of supply. So if we just go back to the Discord and we kind of break this down. So it's a strong area of supply. So a strong area of supply is validated mainly by a couple of things, right? So yes, my trade was slightly lower down. This is a re-entry I didn't take. So what was going on here? One more time to break this down to people was this, right? So this trade obviously trailed my stop loss closer to my target, just fell shy of 60.05 at the time. What was going on is we can see here aggressive sellers are stepping in. Aggressive buyers step in, right? These aggressive buyers fail to drive price higher. There were some passive sellers over here which also failed to drive price higher. The aggressive sellers are what determines the market. So if you're interested in learning how to form a trend reversal, how to form a trend exhaustion, just comment below somewhere in this video and I'll be more than happy to help you out.